Thank you, Jerry, and thanks to Stu and the team for giving us the opportunity to have a chat about our Gabonintha vanadium project. Bit of a change of pace, obviously, jumping from gold to vanadium, and also we're a development story. We're about to deliver our definitive feasibility study and progress into development, so a very advanced project. You can come to the booth at booth 22 to read that disclaimer at your leisure. What we'll talk about is vanadium and the structural change that's happening in the vanadium sector, and why it's such a great place to be developing a project. Our Gabonintha project in Western Australia, the PFS that Jerry touched on, which we'll talk a bit more about, key there being a very low, very competitive operating cost of $4.27 a pound. Feasibility study, the definitive feasibility study, which we're well and truly down the path on delivery of that in the next couple of months, so it's nearing completion. And then we'll also touch on looking at the global peers, so who else is in the vanadium space, who is out there in actually producing vanadium outside of some of the key areas in China and Russia. So Largo Resources is sort of, I guess, what we're aspiring to be over time. A recent producer, only started producing in this decade, currently just shy of a $1 billion market cap, so they've had a really good run. Jumping straight into what are the key catalysts for this year. So top one there, we brought out an updated resource in March of this year. That will flow through to a new reserve position, new mining studies around that, new mining inventory, and update our mine life and the processing life for the project. Pilot plant test work, really important for a project like ours, confirming scalability. We've done all the test work at lab scale, we're now doing it at pilot plant scale, and that's underway right now. We'll touch on that a bit further on. And again, a specialty metal like this, engaging with customers is really key as well. So we've spent at least the last 12 months or so travelling around key parts of the world where our potential customers are, off-takers and financiers, and having all those discussions. And the little jars on the right-hand side of that slide show some final product that we've produced. Again, very, very important in this sort of commodity. Get some product out to your customers and have a look at that so they can be comfortable with what we're going to be producing. Key for us, we can produce a really high purity V2O5. Benchmark pricing's typically 98% purity. We can produce well and truly in excess of 99% purity from our project. And as I've touched on, the DFS is well and truly underway. I won't talk too long on this slide. I'll say Michael Fry, our chairman, is with us, so booth 22, you can come and have a chat with him. The couple of key things on this slide, David English, who's our project director, only a reasonably new appointment, started this year. He's been involved in some of the biggest project developments in WA over the last decade or so. He's also spent a couple of years at the Windamurra vanadium project, so really key for us. Windamurra hasn't had the best of runs over the years. To have someone who's been involved in that project and can identify the pitfalls and make sure we don't go down those paths is very important. There's a group of consultants there, Wave, CSA, METS, Integrate, who did the PFS and now working through the DFS. And at the bottom there are financial advisors. Again, just a recent appointment at the beginning of this year, all very key in organising and arranging finance and advising us on how the finance packages look like. So Blackbird and Bridge Street Capital Partners, again, a really key group involved in our company. We're a very new company, listed in December 2016, so therefore we've still got a really nice capital structure, 87.5 million shares on issue. We had $4.9 million in the bank at the end of March. That'll see us well through the DFS stage. There's a little comment there from Jack Better at Roskill, who's put out some research on the vanadium space recently, and then that's quite a nice one to have for a company like ours, who we believe we're the leader of the emerging vanadium producers. We'll be the first one into production, so take advantage of that opportunity. Now, vanadium itself, we'll talk about the commodity. Majority of vanadium is used in the steel industry. It's an alloying agent in steel, used in construction. Rebar is a big driver of consumption. 90% of consumption goes into steel, and some balance goes into some specialty alloys and into the battery sector, which I'll touch on. The Model T Ford there, that was the first real industrial use of vanadium. Vanadium in the chassis of the Model T, 100 years or so ago. We've also got the fighter jets there, so there's a little bit of vanadium goes into specialty alloys that are used in aircraft, and that's a big growth portion for vanadium. Vanadium's real benefit is you can use less steel or less of the material to get the same outcome, so you can get your weight down. So, talking about EVs, so if you want to get further with your battery life, the lighter your vehicle, the better. Vanadium predominantly comes out of China, South Africa and Russia. There's only 3 primary vanadium mines left in the world at the moment, 2 in South Africa and 1 in Brazil. The bulk of it comes out of China as co-product to steel production. So processing low-grade magnetite ore bodies, generating vanadium as a byproduct. What's happened in China in the recent times, and it's across a lot of commodities, the environmental regulations are being enforced a lot more than they have been previously. That's impacting big time on some of these magnetite steel mills. So we've seen a reduction in supply side, and at the same time the Chinese are saying we need to have a better quality steel. So they're increasing the amount of vanadium they want to use in their rebar, so they're driving the demand side. So steel is really driving the vanadium market at the moment, and that's really our target audience. We look at this emerging battery sector, the vanadium redox flow battery. It's a stationary storage battery. It's never going to compete with lithium in your mobile devices, but it's the ideal solution to pair up with your renewable energy sources. So as we move further and further into reliance on renewable energy, you need reliable batteries to store that energy. The VRB is that solution, and that is really going to be coming to the fore over the next probably 2 to 5 years, and that's going to be a massive driver of vanadium consumption. This is why we're so keen on vanadium. So this goes back to 2004 and shows that the orange bars are the inventory changes year on year. So you can see from 2004 through to 2010, as the Chinese steel industry ramped up, we were getting more and more vanadium coming into the marketplace. Since 2010, that's reversed, and year on year, we're actually drawing down on inventories to the point now where there is very little inventory left in the marketplace. China has become almost just self-reliant. Instead of exporting vanadium to the world, they're consuming pretty well everything they produce, and that's a major change in the dynamics. And that structural change is really what's driving the market, driving the price, and driving obviously our desire to get into production quickly. We like the battery side because the battery side will provide a floor to the vanadium price. So anything around $10 a pound is a good price for the vanadium redox flow batteries. So we're currently sitting at around about a $12 per pound V2O5 price. You can see there our OPEX from our PFS is $4.27. So we've got a very nice margin at those sort of levels. That's supported by the steel industry, and as I say, the emerging battery sector will really provide a solid floor for us. This slide shows the predictions on where the demand's going, and certainly demonstrates we're not getting a lot of growth coming on the supply side. So you've got this big gap that's emerging. We're already in deficit. That gap is just going to grow because there's no new primary producers coming along in the foreseeable future. So we are the next one that will be coming into production, and we're looking at 2021, sort of late 2021, for when our project is online. So and the way we see it, from any large-scale primary producers, we are the next one along the line. So that gap there is where we're aiming to start to fill. So the project itself, Gabonintha, located up near Meekatharra in the Murchison district of Western Australia. Fantastic infrastructure. The highway going up to the Pilbara runs right past our door. The Port of Geraldton, where we'll be bringing in our equipment for construction and also reagents. We'll be exporting out of Fremantle. We're only going to be producing around about 1,000 tonnes of V2O5 per month. So it's a really high value, small volume product. So we'll just put that into barrels, into bulker bags, and we'll be putting that into sea containers and shipping out of Fremantle. So it's a really fantastic location. Won't dwell too long on the geological setting. As I say, we come to the booth. Our exploration manager's there, can talk all about the geology. The PFS and then now the DFS is focused on the northern block. So we've just released, as I said, that new resource statement at the end of March, 130 odd million tonnes at 0.9%. Importantly, 71 million tonnes at 1.1% V2O5. That puts us up there as one of the highest grade primary vanadium deposits in the world. Which is, again, one of the reasons we're so confident about our development pathway. as I say, won't touch too much on that. The maiden reserve, which came out of the PFS, 16.7 million tonnes, that'll be updated as part of the DFS. The new resource, the new measured and indicated resource will flow through to an updated reserve size. As Jerry said in the intro, the PFS had a 13-year mine life. We're targeting something closer to 20 years out of the DFS. I've already touched on that, 71 million tonnes at 1.1, and that really comes through in this chart, where we do a bit of a peer comparison across the globe, similar sort of geological settings, primary vanadium deposits. The darker grey deposits are two of the three mines that are in production, so Largo Resources in Brazil, and then Bushveld have got a project in South Africa. You can see the size of our high grade and the grade of our high grade resource compares very, very favourably to where Largo sit, and Largo have got an 800 million market cap and we've got a 16 million market cap, so I think we can see a bit of a valuation gap there. PFS out in June 2018, so 18 months on from listing, we put out our pre-feasibility study. Now these numbers are about to get updated in a couple of months' time with the DFS coming out. The key one out of that for me is the $4.27 operating cost. We believe that'll come down a little bit in the DFS, but as I've said, that's very, very competitive and at this stage gives us a really strong margin. 13,000 tonnes per annum V2O5 would make us the biggest single primary vanadium producer on the globe. And I guess the very short payback time, we'd expect something similar coming out of the DFS. You know, sort of 2 to 3 year payback on our capital with a circa 20-year mine life is pretty attractive. This is a nice little chart that shows what the forecast cash costs are for the vanadium industry for 2019. So it says if we were in production today, based on our PFS numbers, we would be the 4th lowest cost producer in the world. So again, a very nice place to be. So those two charts comparing our peers and that cost chart really demonstrate the strength of our project. We're on the right end of the curve for both of those. Met test work's really important. Geology, mining is reasonably straightforward for this project. The metallurgy is where we really need to understand everything. From the very beginning, from our very first RC program, we got into the geometallurgy, really understanding, can we produce a saleable product? Can we deliver an outcome? So that test work's gone through, and as I say, we've delivered a really high purity product. We've got a really clean ore body, coarse grained. It means that we don't have a lot of deleterious elements ending up in our final product, delivering in excess of 99.5% V2O5. But we've now taken it the next step. We're now doing the scalability test work as part of our DFS, confirming what we've done at lab scale and side of bench scale is now being stepped up. We've got a bulk sample currently being processed through a roasting kiln over in the US, and that's just going to, as I say, that's all about design, confirming design for the project. Did a reasonably big program of drilling at the back end of last year, which fed into our resource upgrade, and that shows that the extension from the June 2018 PFS indicated limit down to where we are now with our March 2019. Also importantly, our pit walls in the PFS were very, very shallow. We had no diamond drilling data into the footwall. We've now got that data, and we're expecting we're going to get a much steeper pit wall, which will have a positive impact on our strip ratio and flow through to a lower operating cost. And this is really just to demonstrate that the dotted lines are the open pits from the pre-feasibility study. The yellow is our new indicated resource. So you can see in that figure the potential growth of our reserve position and our growth of our mine life. So touching on our milestones, as I say, pilot plant work's well and truly underway. Doing this work to prove scalability, but also generate more sample for end users. We just sent some more sample off this week to some potential end users around offtake. All the normal things you do in a DFS around the engineering side is pretty well done now, so we're building all that into the DFS model. We've identified our process water source. We're actually started drilling this week on proving up and doing some development bores in that part of the world. And the environmental and heritage surveys are all moving along nicely, so we don't see any impediment to our development from that. Our timeline, resource already done, reserve upgrades on its way with this new resource. DFS middle of the year, so we're looking at July for that. Offtake discussions are ongoing, and they're really key to us delivering those in the next little while. Permitting we expect to get delivered in the first half of next year, and from then on you can see we're aiming to be in commissioning stage at the beginning or the back end of 2021. And that's, I guess that's Technology Metals in a rapid 15 minutes. So we're leveraged to what's a structural change in the vanadium sector. We're really progressing with our end user discussions and developing those relationships. We've got a very, very important project on a global scale, low cost, high grade, fantastic environment to be operating in, and we've got building a really experienced team to help us build the project. Thank you very much. Come and see us at booth 22.
Thank you, Ian.